Hey there, guys. This is a surprise live, a surprise live broadcast for me. So I'm not sure that how many people who picks up on this broadcast very quickly. But nevertheless, I will just go through these short chart analysis because I think these are very important. Today we have a day. I'm looking at the markets now. I am seeing the Dow Jones is down 3.7%. I see the Nasdaq is down 4.6%. I see the S&P 500 down 4.3%. And I see the for Europe's sake, the FTSE is down 5% and the DAX is down, wow, 4.7%, 1,000 points in the DAX, which is a lot. So today is a day where these days are something you would normally see in bear markets. Today is the 4th of April, and today is one of the first days since President Trump how do you say, went public with his tariffs. And of course, this is not good for the markets, not good for the American market, not good for any markets at all. Um, so that's why the market are reacting so negatively to it. And what I want to show in this case is actually, I want to show 4 examples of trading from today where you could actually have profited very good on this price action trading technology that I show here in my channel. So I will link to it in the descriptions as well, so you can go see other price action videos, and you can also see other live videos I've done where I've actually used this price action technique. So not only can you see the price action technique that I'm talking about, you can see it when I do it live, which I have done already in about 6, 7, 8 videos now, and which I will continue to do live in the coming times ahead. After live trading session where not so much talking and not so much necessarily educating, also in day trading psychology, which is normally what I do, but more trying to educate in the price action trading, and basically just talking about what I see on the chart, where I see some entries and the trading it itself. So that's the one of the plan, and another plan is also to go live with some Q&As, so people actually have a whole day where they can ask me a lot of questions about price action trading, and well, they can ask me anything about trading really, but especially about these two things. So but I will start now to we will look at the first charts from today. So if I see if I can share my screen here. There you go. So now you should be able to see Tesla again. This is on the 2-minute chart. We have a green bar opening in position number 1. That is being at or near the 20 moving average. In this case, it's very close to the blue line, and the red line is up here. And you don't need to draw in the fabulous 4 bucks. So the minute that price takes out green in this area, you want to see the red team being strongest. And this happens here. And you put your stop right on top of here. That means that your stop on the Tesla would in this case be around $1.80. So the case here is that you shorted. The first bar is actually a clear red elephant bar. It's much longer than the other bars, and therefore it's a valid short that you did here, and it's taking out green. The second bar that comes after that is kind of like a pause bar where price actually, it's a little bit hard to see here. I'll try and zoom in, but you can see that price actually goes a long way back, but ends up being a neutral bar. And then we have one more red, one more red, one more red, and one more red. So that's 1, 2, 3, 4, 5. And according to Oliver Villas, who I have learned the price action trading from, he says that you need to count 3 to 5 bars and then get ready to take off your money. So that means 1, 2, 3 here. Here I will be ready to take off my money. But on the 5th bar down here, let me just put a cross down here. On the 5th bar there, you should take your money no matter what, or at least take partial profits. Why? Because first of all, you cannot expect more than 3 to 5 bars in every push. That doesn't mean that's not going to be more pushes. So if we cannot see into the future, we cannot see this happening and this happening, but it actually does happen. But listen, so the point is, from the first short up here, you take off a partial of your money or all the money down here if you want to do that. And that means that on the fifth bar, you would be able to take off $9.46. Okay. And the cool thing is, if you look at the same thing just on the 3-minute chart, you can see here also, you can see here also here that we have this red bar starting also in position number 1, and another one and another one again. So you can actually enter which one you want. And by the way, you can look to the left for clues, and you can see here that the last low point for price was not even there, was not even touched. Market tried to touch it but couldn't even touch it. So as soon as this one became like a tail bar pointing downwards at about 2/3 of the time from the 3-minute, you could even go short there. All right, but let's go back to the 2-minute and watch that one as well. Here we go. This is the 2-minute. So the question is, okay, does this market with Tesla today on the 4th of April, does this one actually produce more entries? Yes, because soon as price gets closer to the 20 moving average, as long as price doesn't break through the 20 moving average, this gives you a possibility to go short again. As soon as greens get taken out here, and then put your stop on top of here, and therefore you can follow the ride down one more time. In this case, you could say, well, if you count 1, 2, 3, 4, 5 red bars, you're around here. What you could also do is that you can simply say, no matter if I enter up here, the first one, or I enter down here on the second one, I can follow my trade. And as long as I don't get a color change, or as long as the 20 moving average doesn't get broken, I will stay in the trade. So this would actually allow you to take the trade all the way from here and all the way to here when the the blue line, the 20 moving average, gets broken. And that's about the price here, where you would get additional $7.48 on Tesla. So that means from the first one, oh wow, the screen is going crazy right now. From the first one, you would basically take off $9. And from the second one, you could basically take off about $7. So that's $16 today in Tesla that you could have taken off the table. All right, let me see here if I can find one of the other charts I wanted to show you for you guys as well, so you can learn how powerful this price action can be. I think it's the Meta stocks. Wait a second. My computer is giving me a hard time. I think I need to buy some more RAMs. Yeah. And it's nice to see that we can also have, different, different views on the charts. And I mean, because not all charts looks exactly so beautiful like the previous one we saw. But now we will have a look at the Meta, because that one is a little bit more difficult. But nevertheless, it's still very good. Here we go. You should be able to see the Meta platform right now. So you see here on the 2-minute chart, we actually have a green bar moving up. And we get a little bit of cluttered thing here where we actually get reds to take out green, and where some people would argue to go short already when red takes out green. But the point is that you also have to look a bit to the left and say, what is the story of the market? Well, the story is that the price actually opens up very far away from the 2 moving averages. And not only that, it opens up with a clear elephant bar. And that means that buyers were stepping in for those 2 minutes. And as you can see, these bars here is basically side-by-side bars. And 50% of the elephant bar is not taken out. You can see here, if I draw a line, more or less here in the middle. Sorry, I need some water, guys. Sorry. If you see here, 50% of the elephant bar here hasn't been taken out. That means the price is still respecting this elephant. And as long as price is respecting this elephant, you have to keep calm for a while. So therefore, you can wait until price gets at or near, I repeat, at or near the 20 moving average, which it does over here. And then you can say, well, as long as price doesn't establish itself on the other side of the blue line, that means in this area here, that means that if green gets taken out, I will have a chance to play it short again. And this actually happens right here. Let me zoom in so you can see it a bit more clearly. because the bar's a little bit small here. Here we go. This green bar here. There you go. This green bar there gets taken out. You can also do these ones. Takes green out. And that was very small letters. I can hardly read it myself. Let's see if I can make it a little bit bigger. There we go. Maybe we should have some other colors. Wow. Wow. It goes completely crazy now. Yeah, there we go. Something like this. So this red bar actually takes out this green bar. That means that you can enter as soon as this elephant, because this is a long elephant bar, it's longer than normal bars. As soon as this elephant bar gets taken out, you can enter here. You could even argue you could enter already there after the green tail bar when this one gets taken out, because this is also at or near the 20 moving average. But let's just say that you want to wait until the, how do you say, the biggest power of green gets taken out, which is this bar here underneath where I put the cross. So when this one gets taken out, you put your stop right on top of the red one here. And what happens? All the way down. Again, you can count the bars. I mean, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 13, 14 red bars. For every, how do you say, for every reaction or move, there's a opposite reaction. So when the market goes down, let me try and see if I can draw it in for you guys so it's easier to see. The market goes down, it does a counter reaction, which is already, you can see, less than about 30% of the first move. Then it does another reaction, and again a counter reaction, which is maybe 33% of the move, and then another reaction again. But now there comes a full reaction, which goes back to the opening point. So just by following the move of the market, you can actually see, well, okay. And in this case, if you say, well, how do I know where to take off my money? Should I take it off down here, or where should I take off my money? Well, first of all, you always have to look for the distance from the red line to the blue line and then to the price. And down here, you can see that all three is very far away. I mean, the blue is long away from the red. It's also, the price is long away from the blue, and both of them is relatively long all away from each other. So this is called dual space. So down here in this area, regardless of the green one coming here, which you cannot see into the future, this would be a good place to take off your money. Secondly, you also know that market, most of you knows that market moves in a kind of a pattern that goes like this. And that means that first leg down, about 30 to 50% retracement. Second leg down, 30 to 50% retracement. And then the leg down. And the market can take 3 legs, 4 legs, sometimes even 5 legs. So in this case, 1 leg, 2 leg, 3 leg. But the third leg doesn't really come, or sorry, the fourth leg doesn't really come here. And the price actually goes back to this one. So you could say, well, if price goes further back than 50%, because 50% is like there, it's like here, it's about 50%. So if market goes back, let me see if I can draw it in here. Like, whoa, like this. This was not supposed to be. I'll just see if I can edit these settings here. There we go. Now my computer's going crazy. So as soon as this fourth leg is actually going back more, here you see, more than 50%, that means that this is actually a time where you should reckon to take off the trade. So that would be, in this case, if we look at the price, it should actually be around this area over here. Let me see if I can draw it in. Around this area here, because then prices actually move back too far. But still, if we took the short here and we take off the money here, we will be taking off $10 in Meta. I repeat, $10 in Meta in less than an hour. So if you have like 500 shares, if you have 1,000 shares, well, 1,000 shares $10,000. 500 shares. Nice. It would be a very nice move when, when the market moves like it does today. All right, let's see if we can look at one more stock. I'll find it for you guys. My computer's really going crazy now. I'll get some more RAMs and see if I can clean up my computer. Maybe it's full of dust or something like that. All right, here we go. Here we go to the third stock. And this is Coinbase. And Coinbase, this is the 2-minute chart. It was really, really nice. Again, if we draw in the fabulous 4 box, should be something like this. Whoops, like there and there. And as you can see, the market opens, in this case, Coinbase opens exactly underneath the fabulous 4 box. And it opens with a red one and then an even longer red one. So it doesn't even matter. I mean, Coinbase was so fantastic. It doesn't even matter which one of these 2 bars did you enter on, because at the end of the day, you would still be profitable. You could say that this one is just an extremely long elephant bar. And of course, if you enter on that one, let's say after 1 minute and 40 seconds, your stop, of course, would be relatively longer than on the first bar. Let's say if you get to enter around here, you have a stop about $3. But then if you count 1, 2, 3, 4, 5 bars, you're still looking at a profit of $6.64. And not only that, of course, if you can keep it all the way down to when the price goes inside the blue line area, it's inside the 20 moving average, you're looking at $10. Or you could look at the $6 and then you can take the color change here or here. I was trying to zoom in so you can see it a bit more clearly. There, first color change at or near the 20 moving average. And if you miss that one, there's a second one there. And if you miss that one, there's a third one there. And even if you miss that one, there's a fifth one there. But of course, when you get all the way down here, you have to also realize that from here to here, price is moving further and further away from the 200 moving average. And this can only go on for so long before price has to retract back into that area. So the last short down here, I would be very cautious because of the distance. But I'm just saying that, I mean, Coinbase was such a fantastic short. And even if you go look at and see the same thing on the 3-minute, it's even more clear. That's why I have said in one of my other videos that you should actually try and put the 2-minute and the 3-minute chart next to each other. I call it the side-by-side strategy, because for some reason, the stocks just tend to have very much clarity on one time frame, but maybe not on the other. You could also say, well, if I cannot see it on the 2-minute, on the 3-minute, sometimes you can then open the 5-minute and the 10-minute next to each other, and you'll be amazed to say, wow, it's so clear. And I even made a short video about this called Search for Quality and Clarity, because at the end of the day, when you enter these trades, you want the highest quality, and you want the how do you say, there's nothing called a safe trade, but the clearest trades where you say, I have no doubt about what I'm going to do here. I mean, I won't shake on my fingers. I will just hit the button and press sell or buy, whatever. It has to be extremely clear, and the quality has to be very good. And when you look at the 3-minute chart here on Coinbase, you see that it opens with what is considered a clear elephant bar. If you don't know what an elephant bar is if you take and compare it to the last 5 or 10 bars, and you can see something like this, which is very much longer than the normal average bars. You can call this an elephant bar. That means there's more money into this bar. And after these 3 minutes here, you can say, well, about 2/3 of the time, if I can already see it's an elephant bar, you can enter the trade. So let's say after about 2 minutes and 45 seconds, you see, okay, this is clearly an elephant bar, and it only has 15 seconds left before it closes. Well, you can enter the trade. You can call this an anticipation trade. And you enter the trade maybe around here, and then you follow down 3 to 5 bars. And then you have the exact same thing here. You get the color change at or near the blue line, the 20 moving average, short, get 3 or 4, 5 bars. You get it one more time here, short, you get 1, 2, 3, 4, 5 bars. You even get it one more time down here, and you get 3 bars before the market flips on you. So even from the first entry, you get 1 more chance, 2 more chances, 3 more chances to either add to your position or just to take a little bit. And that's what I'm saying about quality and clarity, that if you get something as nice as this, the quality, not Coinbase, I don't like Coinbase necessarily, but if you get something which is so clear like this, I mean, it would just be magical, because then, I mean, if you can get a trade set up like this, it doesn't have if it's Meta or if it's Coinbase or whatever it is, doesn't matter. If you can get a trade set up like this every single day, oh my freaking God, because these are so clear, they're so easy to read, that I mean, continuing these ones for, let's say, a year, wow, that could be crazy. I actually looked at one more stock before my computer started to go crazy. Let me see if I can find out which one that was. I think actually it was Netflix. Hang on a second. I'll see if that was the last one. I think it was. Or was that the first one? We looked at Meta and we looked at Tesla. We looked at Coinbase. Yeah, I think it was Netflix. But let's have a look at Netflix, because this is also a really nice setup. And of course, they don't look identical, but as long as they're clear to read, this is the most important thing. Here we go. There we go. Now you should be able to see the Netflix. And I can see for the viewers, if you have any question, just write in the chat if there's questions, and I will try to answer. All right, so this is Netflix, and this is also from today, the 4th of April. As of today, we're still running, the market is still running. And you can see on the 2-minute chart, it opens again underneath the blue line, underneath the red line. The blue line is pointing downwards. The blue line is telling you what direction to bet. The blue line is pointing down with 45-degree angle. It doesn't get better than that. Plus, for the first, how much is that? 1 hour, the price doesn't even go and touch or kiss the blue line. So it doesn't get better than this, because as long as price doesn't get close to the blue line, there's nothing to worry about if you're going short, because that means that the trend is really strong. All right, so when is the entry? Well, it's the same story all the time. As soon as red takes out green, we want to see red power here. And red takes out green right there. We put the stop on top of the bar that we enter, and then it goes back and tests your entry, goes back and tests halfway, and then it just completely loses steam. So again, you can count 1, 2, 3, 4, 5 bars, take off your money off the table. Here you can see Netflix, 5 bars, $12.64 in 5 bars. It's not that bad. If you say, okay, what about that technique where I wait until price actually goes into the blue line area again, I mean, crosses the blue line? Well, fine. The 20 moving average, that's over here. So in that case, you make $28 in the Netflix stop today. I mean, Netflix is also crazy. It's down 4.7% on the day, so it's quite heavy. But $28 per share in the matter of 1.5 hours. It's not that bad. All right, so this was 4 examples on how to analyze today's trading in 4 selected stocks in the market. I just wanted to show you real time, because it's happening today. It's not something where I said, oh, I just find 4 fantastic examples and show you. As you can see, the example was a little bit different in how they looked. But how do you say the key takeaways of this? The key takeaways is that, first of all, if we have something like a bear market condition almost, which I would say we have today with these crazy drops, we still have, first of all, very much volatility, and volatility is what we need as day traders, and volatility is what we're going to profit from when we're day traders. And these 4 stocks that I have shown now, At least 3 of them showed fantastic entry setups right from the opening. The last one took a little bit of time before it showed, but the other 3 ones was just magnificent. And for me, it's like an advice to you guys would be select, let's say, 4 to 8 stocks, not more than that. And you can, for instance, you can use the prorealtime.com/web, the web browser there, where you can actually monitor all 4 stocks at the same time. Um, and in this case, if they doesn't show you anything, clarity and quality, you just move on to the next 4 of your 8 stocks, and you look at the next 4 stocks you have under supervision. And you just need to find one of these clear signals in one of these 8 selected stocks. And if you want some help with selecting these stocks, I would be very much glad to help you, or can easily tell you which one I would look for, because I would look for stocks that, of course, has a lot of volatility, and of course, a big players who's getting a lot of shares sold and bought at the same time. I mean, this doesn't really become such a good deal if you take a stock that doesn't really trade that much, because then you could get stuck in a trade, or there's no buyers, there's no sellers at certain levels. But stocks like Netflix and Meta that I showed you today, I mean, they just go on and go on like crazy. So those are perfect. And you want them also to move within quite a big span. I mean, it doesn't help if they don't move in a big span. But today, both Meta and Coinbase and Netflix and Tesla has moved within a very large span. So the point here is that you look for the quality setup where it's as clear as possible for you. If not on the 2 minute, then on the 3 minute, or maybe on the 5 minute and the 10 minute. You can keep both charts next to each other side by side, so it's easier for you to see. And then you select the chart that you want. And then, of course, if you enter on the 5 minute or if you enter on the 3 minute, you also exit on the same time frame. You don't flip around and say, oh, I can see on the 10 minute there's a selling signal, or on the 2 minute there's a selling signal. You have to stay true to your trade, because you can get, how you say, different signals to see depending on if you look on a 2 minute time frame or a 10 minute time frame. So you have to respect that the time frame you select that you enter from is also the time frame that you select to close the trade from. But in this case, I mean, I showed some really, really nice examples where there was a lot of movement into it. And of course, the indices as well has been moving like crazy. I can see the Dow Jones is down 1,500 points. The Nasdaq is down 780 points. And the German DAX is down 1,000 points. And the reason why I get a bit crazy about this, because when you compare it, I mean, 1,000 points in the DAX is a lot when the price of the DAX currently is 20,574. And you can see that the Dow Jones is down 1,458 points, but the price of the Dow Jones is actually 38,960 points. Talking about these crazy markets, I mean, I was sitting yesterday following Donald Trump's speech on the tariffs, and unfortunately, I lost a little bit of patience on him and on his broadcast. So I closed the trade. I don't know, made 36, 40 points in the Dow Jones, and then it just dropped 400 points in about 2 minutes after that. And so it is, and it continued to drop, and today it's continuing to drop as well. So, yeah. For me, it would have been much better to stay in the trade for maybe a day or 2 or 3. But so it is. I have to learn from my mistakes like everybody else. All right. This was enough for my surprise live broadcast. I'm very happy for if it bring any value to anybody looking right now or looking into the future. If it bring value to you guys, I'm very happy about that, because that's what it's about. And I will encourage you who sees this also to go check out my other live streams, because in my other live streams you will actually see me managing trades just like the ones I have shown you now, managing them live with a real money trading account. And you will also see, which is very important, you will actually also see on my live videos, you will see me even losing trades. And that's because I don't cherry pick anything, and I cannot cherry pick anything. And you have to understand that every trader who's out there, every educators out there are losing, have losing trades. I mean, it's impossible not to have a losing trade. I'm sure you guys who's watching right now or watching in the future, maybe tomorrow, will agree with you. Say, yeah, I also had losing trades. It's actually a part of the game. So it's funny actually that from all these educators that you see on YouTube, that very few of them actually shows how they manage losing trades live. I mean, Tom Hawker is one of them. He does actually shows it. But if you look at the top 10 educators on Facebook with day trading, most of them doesn't even show live trades at all. And you have to ask yourself, why is that? Because if what they spent hours of recording of messages about the day trading skills and the techniques and everything, why don't they put it to the test in a live broadcast? So, but it's also not only that, because of course I understand that then they get caught, you know, but also the fact is that when it comes down to all, there's many trading systems that actually do work very fine, but most of us suffers from the lack of the trading mindset, the patience, the discipline, etc., etc. And so it's not really necessarily the system that is giving us the problems. It's simply the mindset, and that's also why I have made a whole playlist on my channel, which is dedicated to day trading psychology and mindset. And I do encourage you to go check it out, because there you can, both in my shorts video but also in my longer form videos, you can actually get some help on, let's say, how to put your trading mindset so you are more ready to go through this how do you say this jungle of day trading, and this how do you say this journey, because it, believe me, it is a journey. It has been a journey for me for about 17 years now of constant learning. But most important thing is that in your day trading, you need to learn from your mistakes, including all the mental mistakes as well. And it's funny because not that many educators talk about this, really, about how do you learn from your mental mistakes. All right. So go check out my day trading psychology playlist and also my live playlist. And if you're interested in price action trading in all, I also do have a whole playlist with price action. So there's more recorded examples, not only the live ones but also recorded. So go check them out. And if you have any questions, you can write to me. You can see on my channel's info box there's a way to write to me there as well. So thank you so much for watching, guys. I will move on, and good luck with your trading.